this is Nikki. JSW Energy has reported some amount of dip coming in both on the operational performance as well as the bottom line performance year-on-year basis sequentially, though the numbers look better. But we've been joined by Prashant Jain, the Joint Managing Director and the CEO of the company, to understand the outlook of the company. I'm going to start off by asking you about the Q1 operational highlights, sir. EBITDA number, which is at 700 crore, is down 6% annually. Despite a 3.4% growth in the generation. What explains that, and what sort of margins can we expect going forward in Q2 and the second half of the financial year?
Good morning. Our EBITDA was flat at 830 crore. It was actually, year before it was 828 crore, as against that we achieved EBITDA of 830 crores, but our revenue was down, primarily because the last year's same quarter, it was not completely switched over to job work. That's why both the quarters are not comparable. And also there was a lower generation in hydro business, which was due to lower availability of water. But the company did operationally very well. That's why it reflected, in spite of lower generation in hydro business, which will get normalized during the balanced 3 quarters. Our EBITDA was flat. And in terms of the profit after tax, there was a exceptional item of 92 crore, which was pertaining towards the green bond for 10 years, which we did in our hydro business. And that was a one-time cost for the prepayment and amortization of the syndication fee. And if you take that off on a like-to-like operational basis, our profit after tax was up by 22% at 261 crore, as against the year before 213 crore. So it was a beat on sequentially, or it was year-on-year operational performance.
Okay, if you could let us know what sort of margin figures can we expect going forward in the next quarter, since we're already, most of it is like we're looking at August right now. And, how does the second half of the financial year look to you?
Look at this way, that our business is a long-term PPA tied up. So, there will be no cyclicity in the earnings. So it will be a stable cash flows, which we will be generating from our existing 4.6 gigawatt. The real meat is around the growth of the company, because our existing business will be throwing the cash what it is generating year on year. So 96% EBITDA is PPA tied up, so which is well insulated from all kind of a cyclicity of whether it's the fuel price or dollar exchange or generation profile, because it does not impact the earning at all. The earnings are impacted by the short-term PPA portfolio, which is only 13%, which we are targeting to tie up and convert them into the long term, and the future growth, which is going to come from 2.5 gigawatt, which is under construction, and going forward, we want to expedite our further and accelerate our growth.
Okay, that pretty much answers the question in that case. What I also wanted to know from you was, this whole corporate action of the vertical, consideration of vertical split between the gray and the green business. What is the timeline for such corporation, for such corporate action? Any basic understanding on that?
So board has given an in-principle approval to reorganize the business in order to to look at various opportunities for either listing the green business separately by way of a IPO or a demerger, or bringing any kind of a strategic investor. So this is because the ESG theme is on forefront, and there are various lenders and investors who are averse to invest in the green business. Gray power business. That's why this opportunity is being evaluated. So the board has given a mandate to appoint the legal and financial advisors to come out various schemes to evaluate it. And I am expecting that in next 90 to 120 days time frame, we will go back to the board and then present the complete scheme, and then subject to the board approval, that scheme will be implemented.
Okay. Also, word on the industry trend of SECI's unsigned PSAs. We understand 200 gigawatts, sorry, 20 gigawatt has got no PSAs. This is the trend that continues. RE addition will, of course, see a slowdown. Don't you see that's a risk for your company?
So we made a bid of 1260 megawatt with SECI, and I'm happy to announce that out of that 810 megawatt, which we had made a bid in last August, September, we have already signed the PPAs, and they have become effective. And another 250 megawatt will get signed in this month time. And so our 958 megawatt is also signed up. So 2.5 gigawatt we are fully signed and sealed. So there are some difficulties with respect to the solar PPAs because the volatility in the bids outcome is pretty high. So when you see that the power tariff falls month on month from 2 rupees 80 paisa to 2 rupees, and then again it starts going up, so then it becomes a bit difficult for distribution companies to take a call whether at what price they should enter into PPA. So that's one volatility has been creating a lot of issues in terms of the solar PPA. But I believe that you have seen the bottom in the tariff in solar. The prices are going to inch up in time to come. And once that stability comes in, you will be seeing the PPA will start getting signed up.
Okay. Also, what's the quantum of investment in hydrogen vertical, and what is the IRR? What is the percent of balance sheet which will get locked in?
So this 2.5 gigawatt capacity, out of that only 240 megawatt is the hydro capacity. Total capital outlay is 15,700 crores in this entire 2.5 gigawatt. And average tariff is 3 rupees 30 paisa for entire 2.5 gigawatt. And we will be getting better than the industry norms equity IRR in this 2.5 gigawatt. So we will be maintaining quite a robust earning profile going forward.
When you say better than the industry norm, what's the kind of percent that we're looking at? If you can, specify a number to that.
So I'll give you one color because it depends industry company to company. Typically, the industry has been operating between 12% to 14.5% equity IRR in the power sector, but we have been operating even higher than mid-teen or higher teen kind of a equity IRR. So we have been always looking, because JSW Energy has three distinctive advantages than the industry. Number one, we do our projects at a very lower than the industry capital cost. So our gross block per megawatt is lower than the industry norm, so which we are going to maintain in our this 2.5 gigawatt growth story. Second is we are the lowest O&M cost power producer in the country in respective fields, and going forward that will be also reflected in our 2.5 gigawatt growth story. And third one is our interest cost is lower than the industry average cost. And so our average interest cost today is around 8%. And going forward, we are going to maintain this trajectory. So all these three things are going to give us better than the industry equity IRRs.
Which is more than 12.5% is what you said, right?
Yeah, industry operate between 12.5 to 14.5. We will be north of that.
So you would be above that 14.5% kind of a level.
I don't want to quantify that, but I can say that it will be mid-teens or higher teens kind of a numbers.
Okay, that's a fair point there. Okay, I also wanted to understand, is there any change in the company long-term guidance of the net profit figure that you're looking at for FY30? I think that was a 6x kind of growth with 4,800 crore kind of number, if I'm not wrong. Because the current run-up in stock prices is factoring in much higher number if most of the analyst community is to be believed in. Any guidance on that?
So I don't want to talk about I'm not the competent guy to talk about the stock price, but there are a lot of things which are changing in the industry. I'll give you some color. We generate close to 4 million CERs from our hydro business. I used to sell my CER at 6 US cent per carbon credit last July. Today we are selling it at $2 per carbon credit. So the market has decisively changed from 6 cents to $2. So there is a lot of appetite for purchasing the carbon credit in the market, and which is probably is changing the valuation of the company. There are a lot of renewable company which are listed overseas pure platform. There is one platform which is having operations in India but listed in Nasdaq, and then they are trading at 20 to 22 times 2-year forward earnings. So that's how the things are also changing. The third thing is that as I explained about the three distinctive advantages of JSW Energy, we will be generating higher than the industry equity IRRs, and our growth will be pretty much accelerated than what we are really talking about, because that's what we talked about in last 2 months, 3 months when we announced our growth story. We have already converted them into the PPAs. We have already started the construction, and that's what is going to reflect. Third thing is also you have to see our financial ratios. Typically, all power companies which are there present in India or globally, they are operating at a 5 to 6 times debt EBITDA number. We are operating at 2 times debt EBITDA number. So it changes the cash flow quality of our company. Lastly, the industry receivables have been going up. Our receivables have been going down, and we are operating at 3-year low receivables in our balance sheet. So all this put together is giving us a lot of headroom and elbow room for growth and improving our earnings going forward. And so it's an exciting journey in front of us at this point of time. And in addition, we are looking at various other new age businesses like green hydrogen and various other areas.
Mr. Jain, you've clearly not touched base if you'd want to revise the guidance so far, but pretty much put in place all the factors which could drive away the earnings much more in the direction than the guidance that you've provided us with. Any last, words that you'd like to leave us with in terms of your net debt to EBITDA performance, given it's already at the lowest in the industry at 2 times, or for that matter, any other growth parameter that your investors should be looking at?
So I think people need to look at this renewable company as a very different conventional power business, because it's a growth platform, and where the size of opportunity is pretty large, and very few companies can actually convert this opportunity into reality, and that's where the JSW Energy is going to play a meaningful role. And given our financial profile, we will be doing better than the industry peers, which this is what we are really talking about. So underlying numbers will be quite robust given the financial profile of the company and the size of opportunity what we are having. And lastly, that this company is going to be a futuristic growth technology company, where we will be operating in all niche renewable energy segments, whether it is green hydrogen, hydro pump storage, or electric battery storage, or offshore wind turbines. So these are the new age businesses where we will be seen in time to come in a meaningful role. So that's what I believe that industry should watch out for.
All right, Mr. Jain, thank you so much for your time, and thank you so much for speaking to BloombergQuint. Well, that is the management of JSW Energy. Pretty much confident when it comes to the long-term goals. Also is looking at an IRR which is above the industry standards, and is at net debt to EBITDA, which is way below the standards. So with this, it's a wrap. Thank you so much for watching.
Thank you.